SEC greenlights advisors using state trusts as crypto custodians for now. Paul Atkins, SEC. State trust charters step in as crypto's new vaults, as SEC staff grants no-action relief that lets advisors park client coins with entities like Coinbase or Kraken affiliates. Journalist, Hassan Shittu. Journalist, Hassan Shittu. About author, Hassan, a cryptonews.com journalist with 6+ years of experience in Web3 journalism, brings deep knowledge across crypto, Web3 gaming, NFTs, and play-to-earn sectors. His work has appeared in Author Profile, Share, Copied, last updated 2 hours ago. The U.S. Securities and Exchange Commission, SEC, has said it will not pursue enforcement action against investment advisors and registered funds that use state-chartered trust companies to custody crypto assets, providing temporary clarity in a sector that has long operated in regulatory uncertainty. In a letter issued on September 30th, the SEC's Division of Investment Management responded to a request from Simpson Thacher Bartlett LLP on behalf of financial advisors. The letter confirmed that, for now, state-chartered trusts may be treated as banks under the Investment Advisors Act of 1940 and the Investment Company Act of 1940 when safeguarding digital assets. Advisors get green light to store client crypto with state trusts. The decision means investment advisors and regulated funds may place client crypto holdings and related cash with such entities without breaching federal custody rules. The no-action position is significant because advisors under federal law must use a qualified custodian to hold client assets, typically a national bank or trust company with recognized fiduciary powers. Until now, state-chartered trust companies were not universally viewed as eligible custodians for crypto assets. The SEC's guidance comes with conditions. Advisors must conduct due diligence to ensure the state-chartered trust is authorized by its state banking authority to provide crypto custody, maintains audited financial statements, and has internal controls verified by independent accountants. They must also confirm that the trust follows strict policies to protect private keys, segregate client assets, and prohibit rehypothecation without client consent. The letter emphasized that the SEC's stance does not constitute formal rulemaking. Our letter provides our position on enforcement action only and does not provide any legal conclusions, wrote Taylor Evanson, senior counsel in the Division of Investment Management. He added that the position could change if facts differ, or if the Commission pursues new custodial rules currently under consideration. Market analysts said the move could broaden the crypto custody market. Bloomberg's Eleanor Terrett noted that advisors and funds now have clearer assurance they can use state trust companies, which opens the door to greater participation from firms such as Coinbase, Ripple Standard Custody, BitGo, and WisdomTree. Brian Daly, director of the Division of Investment Management, said the additional clarity was necessary to address doubts about whether state-chartered trusts qualified. Industry reaction has been largely positive. ETF analyst James Seifert described the letter as a textbook example of more clarity for the digital asset space, adding that it reflects the type of regulatory guidance firms have sought for years. Daly also said the guidance was designed to meet current needs. We believe the market will benefit from having this guidance for today's products, today's managers, and today's issues, he said. While the letter provides a near-term path for advisors, it stops short of providing long-term certainty. The SEC stressed that all existing custody requirements remain in force, and that future rulemaking could revisit the treatment of crypto custody under federal law. SEC signals major policy shift under Chair Paul Atkins, softening stance on crypto. The SEC is showing a major policy shift, moving away from the lawsuit-heavy approach of its previous administration and toward a more collaborative framework for crypto and corporate oversight. SEC Chair Paul Atkins, who took office in April, said the agency will issue preliminary notices of potential technical violations before pursuing enforcement, giving companies up to 6 months to respond. You can't just suddenly come and bash down their door, Atkins said, criticizing the enforcement-first approach of former Chair Gary Gensler. During Gensler's tenure, the SEC pursued lawsuits against Ripple, Binance, Coinbase, and others, cases Atkins said lacked predictability and legal grounding. Atkins has also rejected the view that most cryptocurrencies qualify as securities. He voiced support for tokenized versions of traditional instruments such as stocks and bonds while dropping several high-profile cases inherited from the Gensler era. The SEC's new crypto task force will host a public hearing on October 17 to explore financial privacy and surveillance technologies. Beyond crypto, the SEC is weighing broader reforms to corporate disclosure rules. On September 19, Atkins confirmed the agency is prioritizing a proposal to give companies flexibility to move from quarterly to semi-annual earnings reporting, aligning with a push by President Donald Trump. Republicans currently hold a 3-to-1 advantage at the agency, boosting the proposal's chances. The shift coincides with Trump's August executive order opening the $12.5 trillion 401k market to alternative assets, including crypto. Lawmakers are urging the SEC to revise its accredited investor rules to expand access. Atkins has further signaled an innovation exemption for digital asset firms, expected by year-end, that would let new products launch without immediate regulatory burdens. Together, the changes mark the SEC's most significant pivot toward crypto since its inception. Follow us on Google News. Trending news. Recommended popular crypto topics price predictions. New ChatGPT predicts the price of XRP, Solana, and Picoin by the end of 2025. XRP price prediction. Liquidity rotation from Bitcoin to XRP expected after SEC approvals. SEC urges immediate withdrawal of LTC, XRP, SOL, ADA, Doge ETF filings. Why? Bitcoin price prediction. Crypto billionaire says BTC could hit record highs soon, thanks to a major shift in U.S. policy. Vanguard U-turn on crypto ETFs could be explosive for Bitcoin. Bitcoin news. Why is crypto up today? October 1, 2025. 3 hours ago. By Seed Fatal Pazik. Price analysis. World-leading AI Claude predicts the price of XRP, Cardano, and Ethereum by the end of 2025. 15 hours ago. By Tim Hackey. Industry Talk. Live crypto news today. Latest updates for September 30, 2025. Bitcoin tops $114,000. Ethereum above $4,200, while AI and DeFi sectors face losses. 1 day ago. By Jai Pratap. Best crypto to buy now in October 2025. Top crypto to invest in. 4 hours ago. By Alan Draper. New cryptocurrencies to invest in today. Top new crypto coins. 1 day ago. By Inesis Tavares. 13 best crypto presales to invest in 2025. Presale crypto list. 14 minutes ago. By Alan Draper. 15 new and upcoming Coinbase listings in October 2025. 5 minutes ago. By Elijah Rankovich. 13 new and upcoming Binance listings in 2025. 6 minutes ago. By Elijah Rankovich. The next crypto to explode in 2025. Our top picks. 14 minutes ago. By Elijah Rankovich. Bitcoin, BTC, price prediction 2025 to 2030. 6 hours ago. By Leon Waters. XRP, price prediction 2025, 2026 to 2030. August 29, 2025. By Eric Huffman. Ethereum price prediction 2025 to 2030. September 11, 2025. By Ben Beto.